Did FedEx just signal a bottom in the stock market? This after reporting Q4 results, which were essentially in line with expectations, but included outlook for the upcoming 4 quarters, which far exceeded expectations set by Wall Street. Does this mean economists are wrong about an upcoming recession, given FedEx's insight to not only e-commerce, but the consumer in general? We'll talk about that and more on today's show. What is going on, investors? Hopefully, you guys are doing well out there. Time to talk about FedEx Corporation, essentially kicking off earnings season. Next week, we'll have Nike, and then we roll into the financials and then all the tech stocks as we head into next month. But we start things off with FedEx Corporation. Now, we're talking about this in the context. Is this stock signaling that this market is starting to bottom out after several months, in fact, all year going down? Now, over the last year, FedEx stock is down 23%. Year to date, down 11%. That includes a nice little after hours pop of these Q4 earnings, up about 3% in the after hours. We'll jump into the numbers. We'll take a look at the revenues, the profits. We'll get through all of the information that you need to know with FedEx. We'll catch you up with everything that you need to know from a financial perspective. We'll also look at this from a technical perspective, because not only from kind of a fundamental perspective, we'll talk about this guidance that FedEx gave for the upcoming year. Well, from a technical perspective as well, this one's at a tipping point, and if the markets start to set up like FedEx has over the last year, well, I tell you what, we could be looking to a break for the upside for some of these stocks, including FedEx. Now, let's jump into these numbers. Revenue came in at $24.4 billion. That was 8% year over year growth. When we come over here to the earnings estimates, we saw that Wall Street was expecting a little closer to 24.5. Now, for the upcoming quarter, expected to be 23.62. They didn't give specific guidance about the upcoming Q1. They gave us full year 2023 outlook. Now, luckily, I do have earnings estimates for that. And essentially, FedEx is trying to come in between about 22.50 or so on that earnings per diluted share. This is for the upcoming fiscal year 2023 for FedEx. And we see that here, that Wall Street was expecting just underneath that. So if your base case was we're going to have this massive recession and things were really going to deteriorate here in the United States, well, all of a sudden FedEx threw a small wrench in that thesis, considering they're coming over and above Wall Street expectations, at least on that earnings side. Now, there is some things to consider from a fundamental perspective when we talk about FedEx. First of all, they have a corporate buyback, which FedEx bought back over $2.2 billion worth of FedEx common stock over the last year. They still have $4.1 billion remaining under this repurchase share authorization, and they are going to purchase $1.5 billion worth of FedEx stock over the first half of fiscal 2023. That basically means before the end of the year. So in other words, over the next 6 months, expect another $1.5 billion worth of common stock repurchasing over at FedEx. That tilts this a little bit from maybe kind of a broader market signal that FedEx could be to more of a kind of a fundamental basis as well. We also saw this stock go up huge earlier last week when it raised its dividend by over 53% to $1.15 per share, which we'll show you here when we get over to the earnings over at FedEx. Well, they could continue to raise this dividend. So both of those things have investors excited. Number one, you have strong earnings growth. You also have a new CEO. You have new board members. You have activist investors pushing this company in a direction where many investors thought this company should have been going in the past. So you have kind of this tidal wave of fundamentals that are getting behind FedEx that I don't necessarily think is priced into the entire market or relates to a broader range of S&P 500 stocks. It could be that this is just a FedEx story, but the fact that we have 2023 outlook in terms of the earnings over at FedEx coming in well above estimates for the full year can make some people believe that, maybe the markets are starting to bottom when you have companies like FedEx produce this strong of a result in the face of all the headwinds that we're facing in these markets. Now, in terms of the results, we had that we'll call that $24.4 billion. We were at 22.5 last year on a quarterly basis. That was up 8% year over year on a quarterly basis. Year over year on a yearly basis, again, this was the end of their fiscal year. And so we get these 12-month results here on the two right-hand columns. You're up 11% on that revenue revenue year over year. That's strong revenue growth. Now, what's also growing strong is you can imagine a lot of the costs, including a look at fuel cost over the last year on a quarterly basis, up 88% from 936 million all the way up to $1.7 billion. You see that held true for the full year as obviously gas prices have been rising for some time. But overall, total operating expenses just up 8%, essentially matching the revenue growth you saw in the most recent quarter. Similar story for the 12-month. You had 11% revenue growth and you had 12% growth on that operating expense side. Before I show you the operating income, otherwise known as the profits over at FedEx, I do want to point out a trend we've been noticing here on the channel as we've been moving through these financials. I tell you what, this FedEx freight segment is continuing to grow very strong on the revenue side, but it's also producing incredible operating income. Now, this could be a story of the time where you have such supply chain tightness that you're able to drive higher than normal profits and higher than normal revenue from that freight segment. Could be a headwind in the future as the freight segment maybe potentially slows down. Otherwise, this is really strong growth. And the thing that I wanted to point out is the operating income. Look at FedEx Express segment, nearly $12 billion, almost half of their total revenue comes from the Express segment, but you printed just $886 million of operating income off that Express segment. Now, the Ground segment, $8.5 billion, almost equal to the operating profit on Express at $849. Now, here's the most impressive thing, are the operating margins on the freight segment off of just $2.7 billion worth of revenue, which was 23% growth year over year on a quarterly basis. Year over year, they saw 22% growth in that segment. Well, look at operating profits. Up to $602 million. That was 67% growth year over year. If that has some way to continue, well, that could be driving a lot of the profits that FedEx is projecting for the upcoming year, because these are fantastic operating margins off essentially kind of a third place revenue driver for your company. That's fantastic. Now, from the operating income side, we had $24.4 billion worth of revenue. We had $22.4 billion worth of costs. So we had about $1.9 billion worth of operating income. Very steady company. And you'd like to see the incoming management to FedEx have this kind of discipline, maybe even improve it in certain ways. You had 8% revenue growth, 8% growth on your expenses, and most of that flowed down to the operating profit side. Now, when we come down here and look at the diluted earnings per share, $2.13, I talked about how this company raised their dividend to $1.15. That's for a full year payout. So this is what also has investors excited and is more of a play and kind of a fundamental story around FedEx that is kind of unique to FedEx. The fact that they're earning $2.13 a share on a quarterly basis. For a full year basis, they earned over $14 per share, and they still just pay $1.15 per share on that dividend side. They could jack that thing up to the sky and still have plenty of revenue and cash flows, as we'll see here in a second. Now, from a balance sheet perspective, over at FedEx, looks pretty good. Okay, cash is down a little bit. We'll assume some of that went to CapEx, some of it went to the buyback. We'll see that when we get down to cash flows. All things being considered, year over year, your total assets just ticked up marginally. From the total liability side, again, ticked up just marginally, paid down a small amount of long-term debt, which sits at about $20 billion. Now, from the cash flow perspective, paints a glorious story. You pull down a net income number in the most recent year at $3.8 billion. This is for the full year, not a quarterly basis. This is for the entire year of 2022, which just ended for FedEx. So they're essentially in fiscal year 2023. So if you see the company start referencing 2023, well, it's because they recognize their fiscal quarter is a little bit different than most companies. Now, you see last year, they had quite a bit more net income, but when we move through the cash flows, we get similar cash flows year over year. $10.1 billion with a positive cash flow last year, $9.8 billion with a positive cash flow this year, more than covers their capital expenditures, which came in at $6.7 billion this year. The company did guide for about $6.8 billion of capital spending in the upcoming year. So essentially flat or just up very fractionally on that capital expenditure side. So the bare bear case for me with FedEx and maybe some of these companies is essentially sideways on everything, their revenue, their profits, their cash flows. Well, even if you go sideways on this company, they're still generating lots of positive cash flow, even after the 6.8, even upside to $7 billion worth of capital expenditures. They had that big gigantic buyback in the most recent year as well, $2.2 billion. Again, they telegraphed in the press release. I think this is also what's sending the stock up, is they're going to do a $1.5 billion of stock buybacks in the first half of this year. So basically over the next 6 months, they're going to buy back $1.5 billion worth of stock. In all of 2022, they bought back $2.2 billion. So incredibly bullish when we look at that from a fundamental perspective. Now, from a technical perspective, FedEx looks pretty good. It's actually in a really interesting spot. This could be where the broader markets and a lot of your other stocks find themselves if these markets continue to rally. Most stocks, including the S&P 500, Apple, Google, Microsoft, Tesla. I mean, there's so many companies that we're looking at that are forming this formation. They've been on a downward side essentially since the beginning of the year. FedEx kind of started the cycle a little sooner than most stocks that we've been looking at here on the channel, and they've just been kind of channeling downward in this channel. And here we are with FedEx right at the top of the channel. And depending on how you want to draw this top trend line in, and I've kind of been playing with it as I've been sitting here, you could be potentially above this trend line. That's exactly what you're looking for from a trend reversal perspective. Now, we do have some previous highs right here at about where the stock is. A very bullish move on FedEx would put up a solid green candle somewhere over the 240 mark. You need to really get over about $240 per share to really take out this downward chop and signal something different from a technical perspective. Now, I would expect this stock to meet some overhead resistance up here at about $260 per share, at least from a technical perspective. But you also have kind of a previous cluster of highs here as well. Wouldn't alarm me if FedEx comes up here to the 240, 250, 260, and then has a nice little pullback. That wouldn't concern me at all. In fact, it could signal that instead of being in this downward channel, stocks are starting to try to reverse, take away this downward channel, and maybe start something new where we start channeling upwards or maybe kind of sideways from here. That's broadly what we're looking for in the markets. FedEx has not confirmed it. You really confirmed it if you put up a big green candle from here, get above $260 per share. So it'd have to be still quite a move, in my opinion, to really technically say we are out of this downtrend with FedEx. I would actually assume that you're still in it, but boy, you have a lot of fundamental support behind this stock, including a strong 2023 outlook on those earnings. You've got a large $1.5 billion worth of buyback over the first half of their fiscal year, which is essentially over the next 6 months. You have a fundamental leadership change over at FedEx as well, and it seems like a push by executives and the board of directors to start meeting some of the demands of shareholders, which would like to see FedEx start to expand this multiple. Currently trades at just 11 times forward earnings, has a 2% dividend yield, and relatively strong outlook both on that revenue and that profit side going up. So did FedEx mark the bottom in the stock market? It is not confirmed it yet, not from a technical perspective, but from a fundamental perspective. FedEx does throw some support that the economy might hold up reasonably well over the next 6 to 12 months, which probably is not priced into the overall markets, and certainly settles some fears as we head into earnings season over the next 30 to 60 days. I'll be here to cover most of it for you. Leave me a comment down below if you have any questions. I'll be happy to answer them for you. Hopefully you guys have a wonderful day out there. Good luck with your investments.